Well, let's check in on those markets. Thank you so much, Nompumelelo. So it was a bit of a somber mood, especially when we look at what's happened from an Asian side of things, given the fact that the Chinese tech stocks tumbled, contributing to the fall that we saw in Hong Kong a little bit earlier on. And then you bring in the fact that we had these rather downbeat economic assessments from Chinese authorities on that front, and the lack of new stimulus measures to support the economy contributed to the dour sentiment that we saw a little bit earlier on. And then when we look at things stateside, a report saying that 72% of the companies on the S&P 500 that have reported earnings thus far reported earnings that were higher than expected, especially from a profit point of view, taking away that fear that a lot of the market participants had, especially when it comes to going into this earnings season, thinking that perhaps earnings were going to begin to slide. But investors do remain cautious, especially when we look at the global economic mood. And then you have US GDP figures coming in, showing a contraction, with a lot of people still quite concerned about what is happening from a US point of view on the ground. But to give us some perspective, and perhaps also look back at the week that was, we are joined by Kabelo Tola from FNB. Kabelo, thank you so much for your time. So, looking at the JSE, given the fact that we are wrapping up the week and also some of the data points coming through from yesterday's US GDP figures, and also some of the, call it the sentiment flowing through Asia, Europe, how are we holding up so far from the last time you looked at the JSE coming in here?
No, we're looking pretty decent. 1% thus far, or at this particular point on the JSE, and the broader global markets are still positive for the week. France actually quite nicely up 6%. The DAX also quite positive. The FTSE also positive. I think it's a relief rally. You've had multiple weeks of depressed markets. Really, it was quite dire. But I think a pause now that we've gotten a very big announcement out of the way, which is the GDP and of course the interest rate. But of course, we're looking forward now to how the economy is actually going to settle.
Talk about that relief rally. I'm assuming at this point it's one that surely you're doubtful whether it's sustainable, given the fact that there's still a little bit of uncertainty ahead.
Sure. Look, we're not getting droves of volume through the markets, and I think a lot of people are still rightly sitting on their hands, waiting to get some sense of direction. For example, has inflation peaked? No one can quite put their finger on that. Is it going to be another 75 basis points or another 50 basis points out of Europe? We're not sure. And like you mentioned, the stimulus packages out of China. We know they're still grappling with their COVID. And all of these unknowns still plague a lot of investors' mind.
How would you characterize the month of June, especially when you look at the major indexes?
Look, I think the month was good. We're talking July. July was actually a very good month. Well, let me not say good. It closed off well. The month could have been a lot worse given what came out. In fact, this particular week, we despite the 75 basis points out of the Fed, we managed to close positive. And I think it could have been a lot worse. Maybe we were helped a little bit by some positive earnings, although the outlooks weren't as great, but certainly the numbers reflecting the first and second quarters were not too bad.
So we're going to start our local earnings season, and it's going to start ramping up as the weeks go in. Are there companies that you're paying close attention to?
Look, we're always watching the top 40. We had a lot of retailers who released very decent sets of numbers. I'm talking particularly the food retailers. We saw double-digit top-line growth there. Look, we're always in the market, looking for particular companies that will probably show some weakness, and we think that their earnings might grow.
We were having a conversation about a week or so in terms of, if we are going into a recession, would there be companies or sectors that you would be a little bit nervous holding going into call it a downbeat rest of the year?
Sort of your non-discretionary stuff. So, let's be particular. Clothing. I'm worried, given the backdrop that we have, that your fashion retailers are going to have a bit of a tight squeeze on their earnings, because really right now with the oil price where it is, the petrol price, although possibly having peaked where it is still quite daunting on a lot of consumers' pockets. So I'm not too sure that clothing retailers. I do like energy still at this particular point, but also I think just keep an eye out for good dividend payers, and I think we should be okay. But don't jump in just yet.
Don't jump in just yet. So before I let you go, how would you characterize U.S. earnings season so far? Did it meet expectations?
I think it largely did. Right now, as the market always is, we're really concerned about the next 12 months. We're trying to look forward to see whether within this next period inflation would have topped.
Yeah.
And companies might not. Of course, there's going to be a bit of squeeze with regards to employment, hiring, etc. within corporate USA and the world over. But is it going to hinder companies to such a point that we're going to see massive drops with their share prices?
All right, let's pause it there. Thank you so much for your time. That is Kabelo Tsola from FNB, giving us his perspective and also wrapping the week for us. And of course, we will be keeping abreast on what's happening from an earnings point of view. That is it for me. We're going to take a break, and when we come back, we'll have more news for you.